Federal versus private student loans, what immigrant students should know. Navigating the world of student loans can feel overwhelming, especially for immigrant students. Understanding the differences between federal and private student loans is essential for making informed decisions about financing education. Federal student loans are generally not available for most immigrant students who do not have United States citizenship or permanent residency. This includes those on temporary visas like F1 or J1. As a result, many immigrant students cannot access federal loans such as direct subsidized loans, direct unsubsidized loans, or PLUS loans. Federal income-driven repayment programs are also off the table for these students. On the other hand, private student loans are offered by banks, credit unions, and specialized lenders. These loans often become the main borrowing option for immigrant students who do not qualify for federal aid. Unlike federal loans, private loans do not have standardized terms. This means interest rates, repayment plans, and eligibility criteria can vary widely among lenders. Some private lenders requiring a cosigner who is a United States citizen or permanent resident. However, there are lenders who offer loans without a cosigner, but typically at higher interest rates. Here are some key differences that immigrant students should keep in mind. Eligibility is a major factor. Federal loans requiring citizenship or permanent residency, while private loans may be available with or without a cosigner, depending on the lender. When it comes to interest rates, federal loans usually have fixed and often lower rates. Private loans may have variable or fixed rates that can be higher, especially if you do not have a cosigner. Repayment options also differ significantly. Federal loans offer flexible repayment plans, including options based on income and potential loan forgiveness programs. In contrast, private loans generally have fewer repayment options and less borrower protection. The application process varies as well. Federal loans requiring completing the free application for federal student aid form, which immigrant students without eligible status usually cannot use for federal aid. However, it may still be useful for some state or institutional aid. Private loans requiring direct applications to lenders, which often include credit checks and sometimes cosigner requirements. For immigrant parents and families supporting students, it is important to explore all available financial aid options. This includes scholarships, grants, and state or institutional aid that may not requiring citizenship. Researching private lenders carefully is essential to find the best loan terms and understand the obligations involved. If possible, consider cosigners to access better loan terms. It is also important to understand that private loans often come with higher financial risks due to less flexible repayment options. In summary, immigrant students should expect to relying mainly on private student loans rather than federal loans. Families should focus on comparing private loan options, seeking scholarships, and exploring state or institutional aid programs that may be accessible despite immigration status. This approach helps immigrant families make informed decisions about financing education while managing risks associated with borrowing.